Hello guys, it's Sharp Blueprint here. Welcome back to my channel and the compliments of the season to you all. Having stayed inactive on here for the most part of 2025, I thought it necessary to put out a video just to get us prepped for 2026. Your ability to get your chart markups right is going to be essential to your trade success in 2026. That I intend achieving with this video and more I'll be putting on here in the coming days. Now, if my counsel is going to hold much weight and given due consideration, then I would advise in 2026 you make it your duty to pay attention to the daily time frame. While I'm not a believer that any one time frame alone is the best for trading, however, in a scale of preference, I would say the daily time frame has to come first, as it has to inform or influence your decisions when you scale down to any one of the other lower time frames. I'll be using the live chart example of volatility 10-1x index right in front of my screen. And this is meant to convey the thought process behind my chart analysis and trade entry. Do well to stick around to the very end of this video. Now, quickly, I have made a trade plan that is meant to sort of be our guide. As you can see right here, anything not included in this summary that you will hear me use during the course of this video is meant to be add-ons. But then, of course, this is meant to be like a structure. This trading plan summary right here. So we have the first says trade from a strong level of support or resistance. Simply put key level. So strong level of support or resistance. In other words, levels of support or resistances that have been repeatedly tested by price and then respected or rejected. That has to characterize that level as a strong level of support. It has to have been repeatedly tested and then obviously see price rejected or respected the level for every one of these times the level has been tested. Now, the second says only trade in line with the dominant trend. Now, I made use of dominant just to emphasize the fact that we want to trade where the majority of the time frames are trending. So if we are going to, for example, if we're going to be looking at 3 different time frames, and then we have 2 of these time frames trending to the downside, and just one against the direction of the other 2, it would be more safer to go with the trend of the other 2 time frames, as opposed to trading just in line with just one time frame alone. So that's why I made use of the word dominant trend. So simply put, we're trying to trade where the majority of the time frames are trending. Now, number 3 says always wait for market confirmation when price gets to your identified areas of interest. So depending on whatever time frames you're doing your analysis from, once you must have identified these strong levels of support and resistances, when price then comes into these levels, it's best to wait for some sort of confirmation. Price has to commit to you that it's intending to respect the level, right? So that's number three. And then number four here says only look to get in on trades after retracements or pullbacks. Only look to get in on trades after retracements or pullbacks. By the time we go further into putting this into perspectives as regards chart analysis, I believe this will be able to throw more light on every one of these points right here. Number five here says buy from a broken resistance turned new support or turned supports, and then look to sell from a broken support turned resistance. That's number six. Number seven, trade entry signal is always a bullish engulfing candlestick close on your execution time frame. So depending on whichever one of the time frames you have chosen to get your trade executions from, the entry signal will always be a bullish engulfing candlestick close on that time frame of your choice. That's number seven on our list. And then final number eight says always look to target a minimum of 1 to 2 RR for every trade setup. So the goal is to look to target a minimum of 1 to 2 or 1 to 3 risk to reward for every trade setup to get in on 2026. So once again, this is meant to be like a guide. So it's going to be a trading plan. Do well to take a screenshot of this, and then subsequently, when you go back to do your own study or your own chart analysis, as you would see very shortly, with me making use of this trading plan, you then can get to put this also into practice to help scale your chart analysis in the year 2026. So very quickly, looking at the daily time frame charts right in front of. Yeah, looking at the daily time frame charts right before us, just like I've rightly said, in 2026, the daily time frame has to be our go-to time frame. Yeah, you heard that correctly. It has to be a time frame of preference. So first things first, I will be highlighting as many levels of strong support and resistances as I can find on this chart right here. Now, that does not mean you will go ahead and clog up your charts with too many levels. At any given point in time, you just might need 2 or 3 levels depending on where price is at. But for the sake of clarity, I will be highlighting as many levels as possible just so you can get a hang of the concept. And you will see very shortly that this will come almost instantly to me just because I've been doing this for the longest period of time. But believe me, you, with a little screen time and practice, you definitely will get a hang of this also. So firstly, I'll start out with this level right here using my horizontal or a 2. I'll start out with this level right here, owing to the fact that, as you can see, we had resistance. We had resistance also here. And then right here, we have support. So I'll start out with that level. And then I will go with 9670 psychological round number. Yeah, that's perfect. And then lastly, like I always will do, I'll introduce my rectangle tool on here. So yeah, this is going to be the first level that is worthy of note. Because like we said, we only want to trade from a strong level of support and resistances. So I will be identifying as many strong levels as I can find right here on volatility 10-1S index. So the next level, okay, I think I'll go with 9610 psychological round number. Yeah, that's perfect. I'm choosing to go with this because quite a number of times you can see we found resistances at this level, resistance at this level, support right about here. And then we also have currently here resistance at the level. We have right here resistance at the level. So you can see here for me, that's a strong level. It's a key level. And then I'd go with this. I'll go with this right here. 4540 psychological number. 9540 rather. I'll bring in my rectangle 2. Then again, you can see how this level has pretty much been holding up. So we have right here support, right here resistance. So you can see somewhere around here we had resistance. We had right here support at the level. We have right here resistance, which is more like the current state of the market. So you can see these levels, I'm pretty much highlighting are levels that have been retested quite a number of times. And then for every one of the times, you can see distinctively the price has pretty much respected or rejected these levels. Now, the next level. Okay, I think I'll go 9470 psychological number. Perfect. Again, like I said, you might not need this much number of levels just so you can see clearly. Just two, three of these levels are okay for you. But then I'm going to be putting as many levels as possible just again for clarity. So you get a better grasp of this concept. So you can see we have resistance right at the level, right here resistance. So we have at the level, we have support right about here. We have support right about here. And you can see this level is indeed a strong level. We have repeatedly seen price respect the level or every one of the times we trade into the level. So I'll go with 9370 psychological number. And then again, I'll bring in my rectangle 2. Now, guys, it's very important to be able to grasp the concept of identifying these strong levels of support and resistances correctly, as they tend to give you better trade opportunity levels. Because once you can identify these levels, then of course, you have levels where you're waiting for price to come into, and then they then present you with potential trade opportunities. Upon price getting to these levels, you must have identified. So I think I'll go with 9280 psychological number. So I can pretty much do this all day long. Just marking out these levels and then waiting for price to come into these levels Okay, guys, I think I'll stick with just this for now. Now, if there's something you notice, guys, price tends to move or trade from one of these levels to another at different intervals, right? So you can see we sold off from this level. We came right into this level of support and we respected that level. You can see we're back to the upside again, where we're pretty much sold off from. So if you identified this level as a strong level of resistance, right? You then of course know when price comes in here, you want to look to sell from this level, and then where would you likely have your take profit targets back to this level again? And if you had that also, then of course you would have had your take profits it even before price had reversed. So while you need to better identify these levels to best give you trade opportunities, you also these levels are meant to kind of give you ideas where you then put your take profit targets by the time you get in on these trade opportunities. So these levels are meant for both trade entries and trade exits, as you can tell, because many a time price will tend to trade from one key level to the next key level. And it keeps doing that for as long as it takes. Now, so that's the first thing, guys. So you clearly can see just being able to mark out these levels, we then now know where is the current state of the market and then what we tend to look out for subsequently. So having done that, we've been able to highlight strong levels of support and resistances because those are the levels we only want to trade from. Guys, remember that in 2026, we only want to trade from strong levels of support and resistance. And then we say what? Secondly, we only want to trade in line with the dominant trend. So having identified that these are the levels I only want to trade from, the next thing would be to figure out what is the market trend on this, right? So clearly identifying the market trend on this, you can see we had a pretty decent sell-off. We had this sell-off right here that kind of led to a bearish market trend. And then right from that level, we pretty much kept seeing. So we had this as a lower low, lower high, lower low. And then you can see price switched and reversed, presenting us with a higher high, confirmation of a market trend shift from bearish to bullish. And then we pretty much kept providing us with higher low, higher high, higher low in a bullish market trend, higher high, higher low, higher high. And then you can see something peculiar has happened right here also. We have a nice sell-off that has pretty much closed below every one of these previous higher lows, shifting the market structure from bullish now to bearish, with this being the most recent swing low. So this is our lower low. So clearly you can see we have the market trending in a downward direction, right? So it's safe to say because we only want to trade in line with the market trend, I only want to look to sell on a downtrend. I only want to look to sell on a downtrend. So having highlighted every one of these strong levels, having highlighted every one of these key levels in the market, I'm only going to be looking for sell trade opportunities from any one of these levels. So clearly we have established that the market trend is to the downside. And then quickly moving to one of the next things as worthy of notes would be right here, number 6. Sorry for the fact I'm jumping all the way to number 6. It says sell from a broken support turn resistance. So now the market structure, establishing the market trend, has pretty much told me what trade opportunities I want to look out for. So I only want to look to sell. So number 6 here says, if I want to sell, I have to sell from a broken support turn resistance. So what happens is currently this is current price of the market. Right? So there's pretty much one of two things I would love to do. So it says we only want to sell from a broken support turn resistance. So if I want to look to sell on volatility 10 on this index, so right here we have it ourselves a support right here. So I only want to look to sell. What then do I do? So it's either I will have to wait for price to come and take out this level of support, because we're saying that we want to sell from a broken support on resistance, right? So I can wait for price to come and take out this. And then at the retest of this, I then look to sell to the next key level. Alternatively, you can see right here, what would you notice? Previously, we had this level as a level of support. And then when we eventually add the sell-off that shifted the market structure from bearish to bullish, you can see a previous level of support broken becomes a new resistance. So you can see this is part of the reason why this pullback, again, you tend to see that's part of our trade rule. Our trade rule says we only want to get in on trades after retracements or pullbacks. So that explains why, as soon as we had this very strong sell-off, we had ourselves the nice pullback coming into the market. So now would be the best time to start looking to get in on every one of those sell trade opportunities, because one of the rules states that we only want to look to sell after pullbacks or retracements. And then where do we want to sell from? If we're looking to sell, we want to sell from a previous level of support broken, which has now turned resistance. And now you can see that this pretty much explains why some 3 days ago, price has come nicely into this level, which was previously a support level, where the break are currently not trading below the level. So the level is expected to act as now a resistance level. So you can see every one of these pullbacks coming right into this level. And then we're having to see now a price reaction off of the level, because we said what? Again, number 3 says what? Always wait for market confirmation when price gets to your identified area of interest. So should you have identified this level some 1-2 weeks ago, even before this pullback came right into this level, then of course, as soon as price comes into this level, which was previously a level of support broken, now acting as a new resistance, which is part of our rule. This level also being the fact that it's a strong level of support and resistance interchangeably, being a key level. You can see that. Once you then wait for price to come into this level, also as part of our rule would be to wait to see confirmations. So price has to give you clues that it is committed to respect these levels. And we've been seeing those clues from the last 3 daily candlestick closes. So you can see we came into this level very bullish some 4 days ago. And then what you'd see is that the next daily candlestick closed with a loss of bias momentum. This closed as a hanging man candlestick. This close also has a bearish hanging man candlestick. So this shows that what? The buyer's momentum is pretty much slowing down. And the confirmation would be 2 days ago. You can say we closed as a nice bearish engulfing candlestick. Started out with a rejection from the level, telling us that what? There are pretty much more sellers in this level looking to short price, readily waiting to short price from this level. So this is the seller's level, right? This is seller's zone. So you can start seeing these are some of the confirmations we're talking about. You will always want to wait to see price giving you clues that it is committed to respect the levels when once it comes into your identified areas of interest. So we have that already, being the loss of bias momentum candlestick, being a bearish and engulfing candlestick, rejection. Even yesterday, we closed with more weak rejections from the level. Indeed, this all of this giving us confirmations that this is indeed a potent seller's level, seller's zone, right? So anywhere around this zone is safe to start looking for this sell trade opportunities. Now, guys, I certainly will not jump in on sales just to have a very huge stop loss and then reunion my risk to reward on this. Just off sticking with the daily time frame alone. So you can see that messes up with the risk to reward already. So now this is where I can then scale down to any one of the other lower time frames. Having fully again, right? Having fully gotten every one of these strong clues from the daily time frame. So every trade decisions I'm going to be looking out for on any one of the other lower time frames are all influenced by the bigger picture from this daily time frame, right? So I'm very much convinced that volatility 10 wonders index is currently trading in the seller zone, right? So I'm currently looking for every one of these juicy sell trade opportunities to take price to the downside. So by the time I scale down to the lower time frames and eventually to my execution time frames, what am I going to be looking for? I'm only going to be looking for confirmations to sell. Guys, I don't know if this makes any sense. So this takes me now to the 4-hourly time frame. The first thing that comes to mind for me right here is the fact that I have the daily time frame in a bearish market trend to the downside. So if I want to look to sell on the 4-hourly time frame, then of course I would want also the market trend right here on the 4-hourly time frame to be in the bearish trend. It only would make more sense because part of our rule states we only want to trade in line with the dominant trend. And that means we want to trade where the majority of the time frames are trending. So firstly, we now have the daily time frame in the downtrend. So since we have that from the bigger picture, I would love to also see that the 4-hourly time frame is in the downtrend. And clearly, that is the case right here. As you can see, we have ourselves higher low, higher. So we're pretty much trending higher. And then we have nicely broken below this, with price giving us now the most recent swing low right about here. So we have a lower low right here, shifting the market structure right here on the 4-hourly time frame from bullish now to bearish. So we have the daily in a downtrend. We have now the 4-hour time frame also in a downtrend. So we have two time frames in a downtrend. Two time frames in the downtrend. So we say we want to trade where the dominant time frame leads, where the majority of the time frames are. So now we have two of these time frames to the downside. So the 4-hourly time frame trend is pretty much in sync with that of the daily time frame, makes it perfect, makes my selling volatility 10-1S index a high probability trade already, because I now have two of these major time frames to the downside. And then this is where I pretty much or now start bringing in every one of these add-ons I talked about, which is not part of our trade plan summary. But then, like I said, these are all just add-ons. They're meant to stack up your confluences and increase the probability of the trade going in your favor as against it going against you. Now, you can tend to see as soon as we had this sell-off, shifting the market structure from bullish rather to bearish, part of our trade rule again says we only want to trade, what's that? We only want to trade, so you can see that right here, only look to get in on trades after retracements or pullbacks. So as soon as we had this 4-hourly time frame sell-off that shifted the market structure on the 4-hourly time frame, this is where we then wait for the pullbacks, for the retracements, because we are only going to be getting in on trades after retracements or pullbacks. So as soon as we had this sell-off, then of course we're waiting for price to give us a pullback, which has pretty much played out already right about now. So you can see price has given us a nice 100% retracement back to the previous 4-hourly time frame highs right about here. So this is a 100% retracement, perfect pullback. And then what have we also noticed? We're noticing that price has not just given us a pullback into the daily time frame key level. The retracement from the 4-hourly time frame has come right into the daily time frame key levels. But then, of course, we're kind of seeing confirmations again. 4-hourly time frame confirmations. We had that on the daily time frame. And then again, now coming down to the 4-hourly time frame, we're seeing even more confirmations. This is telling us that indeed price is committed. Take note of the word. Price is committed to head to the downside. So while we're looking to sell volatility 10-1S index, price is pretty much giving us quite a number of clues that it indeed wants to head to the downside. So all of this now puts our selling volatility 10-1S index as a higher probability trade already. So we have clearly 4-hourly time frame rejection from this level being our key level as identified from the daily time frame. So our retracements came back nicely back into our key level. Nice 4-hourly time frame rejections, bearish engulfing candlestick close, which is perfect. So should you want to get in on sales from the 4-hourly time frame, should you want to take the 4-hourly time frame as your execution time frame, again, remember, as part of our trading plan, like I said, take a screenshot of that and always keep it somewhere where you can always see it, as it then becomes like a guide before you get in on any trade. As part of our trading plan, we said what? Our entry criteria will always be a bearish engulfing or bullish engulfing candlestick, depending on what you're looking for, on any one of the execution timeframes. So should you want to get in on a sell, then of course, we've had ourselves a decent confirmation entry for sell right here on the 4-hourly time frame. Having seen this bearish engulfing candlestick that pretty much came in after the retracement kicked in, right? So then you can start now looking to sell. But then, of course, like I will always say again, this then messes with our risk to reward. So this is where I keep scaling down even more time frames lower to get an even smaller entries, and then gives me a better risk to reward, because by the time I get in on sales from this level, you can see we have just our next daily time frame key level right here at 9470 psychological round number. And we said just as much as every one of these levels are meant to give us entries, they are meant also to give us ideas for exits. So if I'm going to be selling from this level, I have this entry just way too close to my exit right here. So guys, take note. Also, I think that escaped my mind. Right here on the 4-hourly time frame, you can see we have ourselves a perfect case of a head and shoulder pattern, also a potential head and shoulder pattern. Now, this is not part of our trading plan summary, but then, like I said, these are add-ons, confluences, strong confluences that add up to your reasons for wanting to get in on the trades. As such, putting your trade in even more higher probability, right? So we're having to see right here also from the 4-hourly time frame a decent head and shoulder pattern. And now this then takes me to the hourly time frame. So we have the daily time frame trending in the downward direction. We have the 4-hourly time frame trending in the downward direction. We have the 4-hourly time frame presenting also retracements. We want to get in after every retracement or pullbacks. That's part of our rule. And then the entry criteria would be the fact that we want to see confirmations, bearish and engulfing candlestick. We've seen that from the 4-hourly time frame. Now, taking this a time frame lower once again to the 1-hourly time frame. Now, first things first would be the fact that what I want to have the market's trend in the hourly time frame also in sync with that of the other time frames. And then you get to see also so let's start out with this. We'll have this. So we shifted to bearish right here. And we're pretty much we've been bearish, lower, higher low, higher high. And then we have now a confirmed structure shift, as you can see. Now you can see I'm not making this up, guys. So we have a confirmed structure shift from right here on the 1-hourly time frame from bullish to bearish. Now this now putting the daily time frame in a downtrend, the 4-hourly time frame in a downtrend, and then of course the 1-hourly time frame in a downtrend. So now we have the majority of these time frames trending in a downward direction. So this of course makes selling trade opportunities more higher probability on volatility 10-1S index. And then you can see we have this sell-off that has pretty much shifted the market structure from bullish to bearish. Now, price is looking like what is presenting us with a pullback. And because part of our trading plan says we are only going to be selling after retracements or pullbacks, this is where, of course, I want to wait for a much deeper pullback. And then I'll be looking to sell a much deeper pullback. And then I will be looking to sell on this. I think I'd have myself an hourly time frame, an intraday key level, where I will be waiting for the pullbacks to come into before going in for sales. So you can see at this level right here, which is more like an hourly time frame key level, you can take note for every one of the times we've tested this level right here, we're at resistance at the level. So just like we did on the daily time frame when we're identifying our strong levels of support and resistances. Now, guys, you have to understand, because the market is fractal, everything that happens on the higher time frames happens on the lower time frames. That tells you the fractal nature of the market. It just takes a different timing to play out. So just like we did on the daily time frame, when we are highlighting the strong levels of support and resistance, should I, in this case, since I'm looking to highlight a level where I want the pullbacks to come right into, it's pretty much the same concept. Looking at a level that price has previously reversed from, repeatedly tested and reversed from. So you can see right here, we had from the early time frame resistance right at this level, resistance. You can see resistance right here. You can see resistance right here. So now this is what I would love to see. I would love to see now price make a much more deeper pullbacks, come right into this level, and then give me confirmation for sell, a bearish engulfing candlestick. Like we said, that will always be a entry confirmation. Now I can choose to go even one more time frame lower to the 30-minute time frame to get an even smaller entry. But believe me, whatever you want to do from any one of these time frames, adjust to keep on stacking up your confluences, like more like the add-ons. Since we pretty much followed every one of the plans were highlighted at the start of this video. Every other things are meant to be like add-ons to kind of give you much more smaller entries. Now you tend to see what happens right here is the fact that this is looking like we're having ourselves a potential head and shoulder pattern should this play out right here also on the hourly time frame. So every one of these are strong confluences. By the time also we bring in the Fibonacci retracement, then of course you can see this level where I pretty much have highlighted as an intraday and hourly time frame key level is aligning perfectly with the Fibonacci 61.8, Fibonacci 51, 50 reversal, strong reversal level, golden reversal level. All of this making this even more clearer, more better, guys. So currently, as I speak, it's around 1 a.m. already. It's past 1 a.m. Yeah. So just for sakes of not missing out on this trade, I think every one of the confluences I've been gathering, starting off from the daily time frame, pretty much tells me that this is a higher probability trade setup for sell. I think I would be placing a sell limit right at this potential right shoulder. I have my stop loss somewhere around here. So just because I might not be active for the next couple of hours, because it's 1 a.m. right here now. So I think I would place a sell limit somewhere around here. See if I can have myself a 1 to 2.7. Should my sell limit get activated? So yeah, this would be my first level. Typically, this would have been my first level take profit target. But now, if we're scaling down to the daily time frame again to start highlighting level targets, I pretty much think this is ready to start heading much lower. So by the time I get in on sales, I'll be waiting to see how the current daily candlestick closes by the time it traces back to this key level right about here, somewhere around the 9470 key level. So once I have a daily candlestick close below that level, then of course I would be extending my take profit targets with this next level as possible level target. I think, in my opinion, I think volatility 10-1 index is pretty much ready to start heading much lower to the downside. So as such, should my sell limit order get triggered, I think I would be holding this for the next couple of days, depending on what price does once it comes into this next key level right about right below the current price, somewhere around the 9470 psychological number. I'll be waiting to see. So once we can have a bearish candlestick close below that level, then of course I will be holding this much longer for the next couple of days. Most likely to stopping all the way for a 1 to 5 hour plus. And that's more like it. So you get to see how the trading plan is being put right into perspective when it comes to analysis, all the way down to my final entry. this is just again to get us prepped on how we're going to how best to approach the markets in 2026 to sort of like give the desired results you want to see in the markets. Now, thank you very much for staying through till the end of this video. I do hope you paid attention enough to pick a thing or two that you have been incorporating into your trading style in 2026. Do well to hit the like button if you find this video helpful. See you in the next video, guys.